What is it with the age 59 and a half? Why is it so important? What does it mean for you and your planning? That's what we're going to talk about next. Hey, my name is Mel Stubbs. I'm here on behalf of Retirement Benefits Institute, talking to federal employees about their retirement and better planning. Please like and subscribe so you can continue to get information like this. In today's video, we're talking about the age 59 and a half. Who knew that half birthdays would become important again? But it does give you some more options to be more intentional with your planning. So let's go over the list. The first thing that's important about this age is that you now have access to your traditional TSP and your traditional IRA with no penalty. There's usually a 10% early withdrawal penalty if you take money out prior to the age of 59 and a half. So now that you're over this age, you can touch your money, you can get it, send it to your checking account, you don't have to pay a penalty. Now, a lot of times when I'm talking with people and I explain you still have this portion of taxes coming out, and they're complaining that that seems like a penalty. Well, remember, prior to age 59 and a half, you have to pay taxes and you have a 10% penalty. After 59 and a half, you just have the taxes. So I know some people think taxes are penalizing. In this case, just the taxes, no penalty if you're over 59 and a half. Prior to this age, if you needed money from TSP, you had to take a TSP loan. So now that you're over 59 and a half, you can still take a loan or you can just take a distribution. The next thing that's important about the age of 59 and a half is you can now access your Roth IRAs with no taxes, no penalties. Now, Roth IRAs are usually tax-free as long as you are over 59 and a half. So that's what's important about this age. And as long as you've had the account for 5 years. So there is a 5-year rule. So assuming that you're past the 5 years, now that you're 59 and a half, you can access Roth IRAs, no taxes because it's Roth, no penalties because you're old enough. Now remember, with Roth IRAs, you have had access to your basis the entire time. Now, basis is just a fancy accounting word for your contribution. So if you've been making contributions year after year after year, then it's grown, you could have touched your contributions anytime. You have to wait till 59 and a half to be able to touch the growth. So if you've hit 59 and a half, you now can touch any and all of your Roth IRA, no taxes, no penalty. The third thing is you can now access Roth TSP. Just like with the traditional TSP, you're over 59 and a half, you can access it. So the TSP does give you the option of when you take a withdrawal, you can take it either from traditional or Roth. They do give you that option. They still don't let you pick between investments. So you can't say, I want it to be Roth and G-Fund only. You can't do that. The investments, the money still comes out pro rata based on the investments you have, but you can touch traditional and Roth TSP now that you're over 59 and a half. Another big thing that you can do now, especially for being intentional with your planning, is you can roll your TSP out into an IRA, and that is not taxable. So you're going from like traditional TSP would roll out to traditional IRA, that's not taxable. Your Roth TSP can roll out to a Roth IRA, that's also not taxable. There are a handful of reasons why you might want to do just that. The first one is you can have access to different investment options. The TSP is very limited. You've got the 5 lettered funds. The G, F are on the conservative end, C, S, and I are on the aggressive end. Now you do have the L funds, but they're still just a predetermined mix of those 5 funds. There are a lot more options, there are a lot more choices of investment strategies that the TSP doesn't have. And if you want to get intentional with your planning, that may be a good reason why you want to move your money out. The next reason people move money out is the ability to do tax planning. And we're talking about Roth conversions. Inside of the TSP, you're not allowed to do Roth conversions. So a Roth conversion is where you have traditional money that you haven't paid taxes yet on, and you can move it over to a Roth account, and whatever amount you move over, it is taxable. And so why would somebody want to do that and pay taxes sooner? Well, if you think taxes are going to be higher later, that means by definition they're on sale now. So if you want to take advantage of the sale price, you might want to go ahead and pay taxes on a portion of your traditional money. Now, you probably don't want to do your entire account because your entire account would be so large it would push you way up the tax bracket. So this is usually a year-by-year thing where you figure out how much money do you want to do this year. You Roth convert that amount, you pay taxes on that amount. Next year, you Roth convert. So it's usually a year-by-year thing, taking advantage of maybe the tax bracket you're in. Some people have the idea of, I'm in a certain tax bracket, let me max out this bracket. I don't want to go to the next tax bracket, but I'll max out the bracket I'm in. That is one strategy. But if you think taxes are going to be higher, then you may want to do this. The TSP does not let you do that. So if you want to be intentional with your planning, this may be a reason why you want to move money out of the TSP. Another reason why you might want to move your money out of the TSP is to get professional help and services. The TSP doesn't have a dedicated financial planner to help you with things. If you have questions about your pension, how much is it going to be? How much is Social Security going to be? When should I turn on Social Security? What investments should I have my money in? Should it be traditional or Roth? Will my money run out? All of these are questions that people have, and the TSP is not set up to help you with that. If you want to get professional help, professional services, you have to move the money out of the TSP. If you're looking to collaborate on the big decisions and then delegate the small decisions, you might want to get help in this area. So that may be a reason why you want to move money out. One thing to remember is that while you're still working, you're over 59 and a half, let's say you do move your money out into an IRA. Since you're still working, you're still contributing to the TSP. So your TSP balance would go down to zero because you moved the money out. But next pay period, you're going to contribute, you're going to get your match, you're going to start building the TSP back. So please don't get confused in that if you move your money out, you're suddenly done with the TSP. If you're still working, you still get to contribute, you still get your match, you don't lose access to the TSP if you're still working. If you're approaching 59 and a half, then you're approaching a major turning point in your financial life. If you need help with this type of stuff, please reach out to Retirement Benefits Institute. They can help you in determining what your pension amount will be, help you determine survivor benefit elections, FEGLI life insurance elections, help you in your planning. And at 59 and a half, you do have some other options that you may want to look into. My name is Mel Stubbs. I will talk to you next time.